Hello guys, glad to have you on board again today. I'm trying to make this one as quick as possible during some rest of my baby boy, and we'll try to cover up what I've been making to prepare for today's US session, restoring from a 2 days off market for the US investors, so low volume during the previous 2 days. The market has been contracting into triangle structures, and early today the Europeans tried to rebound somehow, so we're going to try to analyze this. First, we have a look at the economic calendar. We've got the ADP numbers slightly below the expected numbers, but we don't give a shit about that. Just to set things straight, the market doesn't care about the unemployment or whatever. It's just that the labor market is not the center of the maze right now. I think what the market is focused on is just two things. Rates, meaning the Fed, meaning the Fed's minutes today will be the key element to eventually make the market mover. And also the GDP. I mean, right now the only two aspects the market is focusing on is growth, to see if we can extend danger regarding the yields on equities, the yields on bond markets, and in the same time we're looking at the Fed in order to price the equities themselves, as if we have raising rates in an unexpected perspective, then we might have to take some further profits on the equities. That's what the investors might be thinking right now. So tonight, big day, today or tonight, depending what time frames you're currently trading on, will be a big market mover, and we'll see how this plays out. Totally unable to anticipate anything relating to that, so it's basically anticipating trading what's in front of me with low leverage, speculative ahead of the market catalyst, and we'll see how the market reacts to this. I mean, it's going to be a binary choice: either the market take it good or bad. I'd like the market to take it bad, but not necessarily going to be the case, and that's what we'll see right now. So first we'll cover up the cryptocurrencies. Nothing to do in the crypto market right now. Instead of just waiting, we're working around that resistance, meaning that those who've been buying, me included, are eventually taking partial gains in here to secure and pay for their stop losses. So having some kind of little pullback wouldn't be the big of a deal, but I'd like to see the market breaking that resistance. That will be the good sign to me, and keep on pushing to higher level and better valuations for the Bitcoin. So we'll see how this plays out. It's really, right now it's 50-50, hard to tell. I think the bulls have the strength, but we might need to extend the range period in here. I mean, having some pullbacks to these valuations wouldn't necessarily be end of the world kind of scenario. All I wouldn't like to see would be, on a daily perspective, to see the market making a brutal bearish daily candle close. If for some reason we were to close below that low today, meaning if the market is reversing and making the daily candle close right there, that would be kind of a warning sign to me, suggesting me to at least reduce exposition, not to say eventually exiting entirely until we get back to resistances. But from what I can see right now, everything's good. I mean, yesterday we had some risk with that hope of shadow candle, and today we're still trading inside that price, which means as long as we stay there, it's pretty much positive behavior of that market, probably heading toward executing the volume and breaking up the resistance. So I don't worry that much right now, but I still having a look at the daily candle closes right now. Could be a game changer somehow if the bears are brutally taking it over. So we'll see how it is, but nothing that important right now regarding the crypto market. Probably going to have movements during the weekend, so I recommend patience right now, putting alerts and basically waiting to see what the price is going to do, either breaking that resistance or breaking a major support. And until we remain between those two levels, basically doing nothing is the best option right now. So just to set things straight, to me the resistance is right here. We need to make a daily candle close above that price, or at least trading higher than this high, and a negative outcome will be to make candle closes below that level in here. So anything in between is most likely not going to be tradable somehow. And as you can see, we're right in the middle of that area, which means this price really uninteresting to trade. So if you fail to buy, it's way too late to do it. If you want to sell, this is not where you want to do it. You basically would like to wait for a bearish breakout to do that. Now moving on to what is calling my interest right now, it's the SPX market. I think we have pretty much a very nice bearish signal right now, just waiting to see if that's the case. Not yet, actually. I would have liked to have a momentum confirmation right here, which suggests at the Wall Street opening we could go slightly higher, but that would be bearish right now. We've been testing that resistance right here. It's a price I've been forecasting for quite some times. I won't take that trade right now because I think Wall Street can try to chase some stop losses slightly higher at the opening. So I'll be waiting for potential momentum exceeding pattern to trigger. As you can see, momentum is making new lows, which is a good sign, but that doesn't necessarily mean that the market is going to collapse in a straight line. I mean, we can go slightly higher at the opening just to fuck up some bears who've been trading too aggressively. Just going just a bit higher, triggering some kind of exhaustion move on the momentum and some kind of taking profit pattern or exit, which is what I would like to take. So I'm ready to, I would rather like to wait. I'm already short on the SPX. So in order to take reinforcements, I need to narrow the risks to the minimum, which means so far I cannot trade respecting the strategy. The price is showing some weaknesses right now, but I still see some potential to make a momentum exhaustion pattern, which I would like to see first to reduce my risk. So if the market is making one more push, triggering a bearish a momentum pattern, and then confirming me by the candle close, I think I'll take one more reinforcement with a tiny stop loss, just for that reinforcement right above the previous top, or eventually right there. I mean, 27.44. Or slightly higher would be the good, because as you can see, the sine wave target is right here. So if you had to put a stop loss, I would recommend to put it higher than that, which means 27.48 would be a good pick for a market stop loss, which normally the market shouldn't be able to take down. Regarding the VIX, I'm still bullish on this thing. I highly forecast a probable bullish reversal in here. The market has been consolidating more than enough, and I think right now we have more than enough room to get to the upside, finding the target in which I'll take partial profits right here. So near 21, I expect the market to try to sell some volatility again. So right here I'll take partial profits at least. So I'm expecting to see some bearish signals down here, up here, sorry. So if that's the case, I'll take eventually either just 50% profits or the entire profits, depending on the signals quantity I'll have out there. I remain bearish on all the equities themselves. I've been shorting Euro stocks, and I'm still on this one. Not reinforcing right now, because as you can see, the Eurozone has been trying some kind of a bounce today, so we'll see how deep it can go. But I think if Wall Street is reversing today, which I highly forecast to be the case, I think the Eurozone is going to consolidate as well, and at that point I don't see any reasons not to break down that taking profit pattern, which suggests I think we should find one more bearish signal up here. Momentum is already bearish, so we'll see how it can go and if we can handle a candle close with this. And if that's the case, I strongly think that we'll get back to the taking profit support and breaking it down. So that's the same scenario for SPX. If we go there, I have this very nice support area. Just to set things straight, we're in a bullish cycle in terms of sine wave. Let me just delete all the elements. As you can see, it's way clearer to trade that way. So we are bullish versus bearish inside a triangle after a bearish movement. So it's either the bulls take the strength and manage to break down the previous bearish resistance, or they fail and the bears are breaking down the bullish cycle. In terms of strength, we've got double bearish in here with double bearish signals, but we don't have double bullish. So in terms of strength, I'll pretty much stay into the bear side and see if we can break down the bullish side to get to the target. And this is what I've been putting down there. I mean, this is where the target should be. The sine wave target should probably be there, and I've been highlighting two potential support. First one is there, and second one is there. It's giving me a high probable area in which I think we can go today. So I expect the market to go there to prepare trading the Fed's minutes tonight or today, and then I think the Fed's minute is going to create some downward volatility and probably head into that area in which I think bears should consider watching closely for the signals they might have in 15-minute time frame to eventually trigger at least partial profit taking Not to say eventually the entire profit taking in there, and just wait for a pullback in the next few days to short again at better prices. Remember, this is a wave 1 territory, so just the anticipative trader and aggressive trader will take that wave, me included. But the wave everyone is going to try to trade is this one. So right here is just you are taking nice gains to pay for the further stop loss for stop loss to come further, which means right now I'm taking gains, probably taking 100% of my gains right here, waiting for a pullback and getting into leverage trading in here, but with a free stop loss. That's how I do trade. Okay, so I'll see how I can do it, but I think that's the way I'll do it, taking nice gains in here, waiting for the market to kind of dead cat bounce, and in here shorting again with free stop losses. Same thing goes for the Nasdaq. Still bearish on that one, still bearish on the FTSE, still bearish on the GPN, still bearish on Hang Seng, so bullish on VIX. Cannot trade the junk bonds, but as you can see, junk bonds are not doing pretty well. They're trying to rebound, but they've been breaking down with gaps, which means we're probably in a wave 3 kind of scenario in here. And as you can see, it's not going to be pretty. Bearish breakdown, got targets, everything suggesting the bonds, the junk bonds are going to go lower, and that's generally not a good sign for equities themselves. So we'll see if we have some kind of a magical rebounds today, which I don't think it's highly probable, but very likely going to have another drop today, and the equities should follow this. I'm bullish on Eurozone yields. We'll see how this plays out today. We can work out that price area. It's a daily, weekly scenario in here. So I have my price expiration on the futures contracts in mid-September. So I have until there to get to profitable areas. I've been buying near that price area. So patience is required on that scenario. But right now things are doing pretty much good. We've been breaking highs of the daily candles, so it's great. I think we kind of found a support in that area, so I think the price is going to work out that zone, and in the end, even if we have bearish equities, I think we can have bearish equities and bullish yields in the same time. That wouldn't necessarily be a problem. Cryptocurrencies, we talked about that. I'm buying the gold, and I think we have something very great right now. We could have some kind of pullback, but I think at some point, if the risk is showing off in the stock market, I think the money is going to heavily flow into the gold and silver that have been heavily oversold in the next few days. I've been buying silver, I've been buying gold, and I think this is where the money is about to go if risk is on the table. I'm watching closely the US oil, which I think it will trigger an interesting scenario pretty soon. We've been testing that first level. We've got nothing close to a trading signal. It's the daily chart time frame, so I'm going to trade 2-hour chart time frame. But as you can see, we're bullish right now, double bullish, which suggests impossible to trade unless we break down that double bullish signal. As we have a squeezing momentum, that could be the case, which means I've been putting an alert in here to eventually take a breakout entry in here if we had something tradable. Otherwise, I've been putting a conditional order, so it's a selling limit order right here at the 88.6% Fibonacci level, which is 76.6 dollars per barrel, and this is where I'm ready to take a short entry. If that price is offered to me, a stop loss is just right here, so just to set things straight, the stop is not that expensive, and that's the reason why I'll take that price if it's offered to me, even if I have no signals in there. So it's either getting there and triggering at the price, or waiting to have a signal after testing this where I've highlighted the previous resistance right here. So it's 75 point, let's say nearly 76, but below, slightly below $76. So whenever we get to test that price, if I have a double bearish signal, I get into trading this signal, of course. Still bullish on the GBP, things are doing pretty well. As you can see, we've been bullish breakout. The target is right here out of a 23% retracement. Sorry, I need to adjust this. So beyond the 23.6% retracement, I hardly think that we'll get to the 38.2, which means we're probably going to have a validated breakout. So I forecast the price to go there, working that a bit, pushing to divergence, pulling back, and finishing the bullish impulse right here to take profits on 38.2% retracement. So that was the expected plan, but as we are moving on, I can narrow the signal, narrow the risk, and get more precise pricing area to trade. And from what I can see right now, this is where I'd like to take some gains, so I remain bullish in here as long as necessary. The Euro-Yen, I've been taking a bearish entry right on the expected price. I've been forecasting on the previous day. We were on a taking profit pattern. We had a bullish breakout just because of the market catalyst we had just recently, but I don't see that breakout to be validated. Most likely this is going to be invalidated, which will be the confirmation. So you know, I have strong confidence on the Euro-Yen, so I've been putting leverage on that market instantly right on the expected price area. So right now it's kind of a perfect trade. I have the top price. So what I'm waiting for right now is for the price to confirm by retracing down to the taking profit pattern, and then I'd like to see the market breaking down the false bullish breakout to trap the bulls. I mean, I think this is a bull trap, and I think we're going to go down and then break down. So this is where we'll have price confirmation. So consider this. Consider it that way. You have to remain speculative, which means you cannot lose more than 3% of your capital in here, trading that trade until we manage to go back to the breakout level, which will be validation, which means that below validation level, it's okay to go leverage and reducing the stop loss, but right now stop needs to remain there, which means limited leverage is available in here. This is pretty much what I've been buying AUDNZD as well. I've been rebuying it down the bottom today, right on that support, and it's been confirmed right away. We've got blue triangle on a bullish cycle with a bullish momentum. So we've clearly built a support in here, at least a temporary support. So consider it valid in here. You take the lower shadow. So it's a very tiny support. So this is, sorry. But this is still a support, so I remain bullish for now until further notice on that market, at least as long as we don't make any candle closes below that level. Tiny reinforcement, just for the reminder, I was leverage 7 back then. I took profits to reduce to leverage 5. I'm now back to leverage 6. I just expect one more push to get down there and taking another layer of profit to reduce to leverage 4, and then waiting for another pullback in which I'll get back to leverage 7, but we'll have more time to talk about that in details whenever the next steps will be at play and already in your charts. Regarding the equities market, the equities themselves, the stocks, Tesla, I've been taking 50% profit before the closing bell 2 days ago to secure and lock the gains. I expect some kind of a tiny pullback today, but probably going to be sold by the market. So I expect Tesla to get up today, but to be sold at the opened. I expect Apple to be destroyed today. I'd like to see that asset breaking down and gapping down if possible. That would be great to see this happening in the market today, and to see this is a daily scenario in here, and as you can see, we've had a pretty nasty daily candle before heading into the 2 days off, and I expect the market today to keep on pushing downward and closing that gap. So I see no reasons to go bullish until we get there, and it could go even nastier afterwards. We've been trying to break up, and we're probably going to reverse this, which means it's going to be a range scenario first, and last support is there. So I strongly think that we'll get there first, and eventually then after lower. Same thing goes for Nvidia. I expect that thing to fall apart today. We've been working around that support on the flat consolidation. I want to see one more bearish impulse today, heading back to the major support, in which I'll get to validate my scenario. I haven't been taking partial profits right now, still waiting for this to come right at the validation level. So I wait for the price to get to the support. Whenever we get there, I'll trigger of course some partial profit taking to secure the gains. That's basically it. I'm still short on Netflix. I expect this one to start trading very nasty as well. We've been bearish reversing, ranging a bit in a flash consolidation as well. I expect that thing to just fall apart. I mean, this thing can go to crash market anytime. It's just being patient right now. As long as we don't get back to the resistance, I see no risk. To remain bearish and just waiting is necessary right now, and we'll see how this plays out. Either the market reactivates and then we'll have to wait, trigger stop losses, and wait for one more market excess to the upside and try to short again near that price area, which is 468. So it's either we wait to get the price there, or we're already too late and the market is going to collapse. I have no answers. The market will pick up the choice, and we'll see how about that. Regarding General Electrics, I think things are doing pretty great. We've been filling the gap, which means that we're not that bullish. I would have liked to have more bullish support in here. We might eventually have a bearish signal right now with a double bearish signal. So what I'd like to see right now is the market breaking that signal up to confirm the double bottom structure. Of course, if we go down there once again and breaking it down, I'll probably have to lower the leverage because the market could go chasing the lower support area, in which I will remain a buyer, no questions asked. It's just that if we go there, I want to buy at better prices, which means I'm going to take some stop losses and just to buy at better prices later. I'm remain bullish on that asset, no questions asked, and I think we'll get there no matter how, no matter what. It's just a matter of time. That's it for today. I hope you guys learned quite something. Be really cautious with the Fed today. I think this is going to be a major market mover, and we'll see if it can manage to break down supports and how deep we can go. Just to set things straight, there is a low probable, but still something you want to be aware of kind of scenario, because if you look at the price structure, from what I can see right now, we clearly have wave 1 in here, wave 2, 3, basically equal sized. Wave 3 is deeper than wave 1, yes it is, but it's exact same timing, okay? They lasted for long enough, for exactly the same time, which gives us the ability to be into a wave 5 extended structure, which means if we are bearish, we're going to exploit 5 bearish impulses. And you know that if the trend is bearish, the bearish impulses always have one extended subwave count. And for now, we have had none. So it's either A, B, C, and then we're bullish, and we're going to break up some resistances. Option number 2, if we are bearish, we might be needing to make an extended wave count, which means somehow if the Fed is surprising the market, we could have an extended wave 5 going all the way down to at least 161% of wave 3, which is right here. Okay, I've already put that in place. So sorry, wave 4 will be there. So that will push us to at least this price, not to say we could go lower. Okay, so just to set things straight, if the market is collapsing after the Fed, don't rush for buy at that market. Okay, be really patient. If you want to buy, it's there, and the stop loss is necessary at 26.55. If you let yourself go lower than that, you might be facing a bearish extended impulse, which is not the thing you want to be a buyer of. Okay, so be aware of this. I'm okay for those who want to buy, no problems with that, but if you want to buy, do it cautiously and be aware that if the stop loss has to be triggered, don't fight it and just let it go. If the market chooses to reverse bearish, you don't want to fight it. Anyway, that being said, I wish you guys a good trade. I'm not quite sure I'll be able to handle the video tomorrow, and if that's not the case, I wish you a great weekend, and we'll see each other again in Monday.